Today, we're jumping right into the real estate market for 2025. And folks, it's defined by this incredible push and pull. You've got explosive growth happening in Latin America on one side, and this intense search for a safe place to park your money in the US on the other. For investors, it's a huge balancing act.
Really, it all comes down to one massive question. Are you chasing that aggressive growth, or are you trying to protect your capital and prioritize stability? And this isn't some theoretical debate. This is the billion-dollar dilemma that's shaping real investment strategies all across the Americas as we speak.
So, to really understand this, let's start by following the money. And that trail leads us to the #1 safe haven for Latin American capital right now, sunny Miami, Florida.
So you might be asking, why is all this money on the move? Well, it's a classic case of what economists call capital flight. You've got high net worth investors all over Latin America who are looking at the political situation and the value of their currency back home, and they're making a strategic move. They're not just trying to expand their portfolios, they're actively trying to shield their wealth. It's a defensive play, pure and simple. And when I say money is on the move, I'm not talking about a little trickle. It's a flood. Just look at this. A whopping 86% of all foreign buyers in Miami's new housing market are from Latin America. That tells you everything. For these investors, Miami isn't just an option, it's the option.
And if you want to know how serious this is, check out this number. 62%. That's the percentage of these foreign buyers who are paying in all cash. Think about that. They're not waiting around for banks, they're not worried about mortgage rates, they are moving huge amounts of capital, and they're doing it fast to lock down a stable, dollar-denominated asset.
But that's only one side of the coin. While all this capital is flowing out in search of safety, some absolutely incredible growth opportunities are popping up within Latin America. And this is the other side of that balancing act we talked about. High risk, yes, but also potentially very high reward.
And here's the whole trade-off in a nutshell. You could look at a market like Bogota, which is offering amazing rental yields because of strong local demand and government subsidies. Or you could look at Miami, which offers predictable, steady returns, all backed up by a stable legal system and the US dollar. It's a straight-up choice between high potential and high stability.
Let's break down the actual numbers, because that's where it gets really interesting. In Bogota, you're looking at an average gross rental yield of 8.25%. That is some serious cash flow. But then you look at Miami. The yield is lower, sure, but the annual appreciation has been holding steady at 6.8% since 2020. So what do you want? Higher monthly income from a place like Bogota, or that steadier long-term wealth growth you get in Miami?
Now, the growth story in Latin America isn't just about apartments and houses. There's this massive economic shift happening that is completely transforming the industrial sector, especially in Mexico. It's a trend called nearshoring. All it means is that companies are moving their manufacturing out of places like Asia and bringing it closer to their customers in North America. Why? To make their supply chains stronger and more efficient. And the impact of this? It's been absolutely explosive. Non-residential construction in Mexico is up 39%. Industrial rents have shot up by double digits, and foreign direct investment? It surged 64% compared to just before the pandemic. Nearshoring isn't just some buzzword, it is fueling a legitimate industrial real estate boom.
Okay, so on top of this shifting landscape, let's throw two more game changers into the mix that are basically rewriting the rulebook for real estate. Powerful new technology and a whole new generation of buyers. First, let's talk tech, specifically something called tokenization. So what is it? Put simply, it's the process of taking a real physical asset, like a skyscraper or an apartment building, and converting its ownership rights into digital tokens on a blockchain. Just think of it like turning a building into a stock, where every single token represents a tiny, tradable share of that building. So how does it actually work? Well, it's pretty straightforward. You take a property's value and you divide it into thousands of digital tokens. Then, investors like you or me can buy as many or as few as we want, giving us fractional ownership. And here's the kicker. These tokens can be bought and sold on digital markets, which brings liquidity to an asset that's been traditionally locked up for years. And this is the part that changes everything. The barrier to entry for real estate investing, which used to be tens, if not hundreds of thousands of dollars for a down payment, has basically crumbled. With tokenization, you can own a piece of a prime property for as little as $100. It's opening up an entire asset class to everyone. This new tech happens to line up perfectly with a huge mindset shift that we're seeing, especially with younger generations. The old dream of, I need to buy a house to live in, is being replaced by a much more flexible financial strategy.
I'm going to buy to invest, and I'll rent where I want to live.
So what does this new generation actually want in a home? Well, their priorities are totally different. They care about sustainability, smart home tech, and flexible spaces they can adapt. But the number one demand? Walkability. The ability to live near shops, parks, and cafes is so important that 92% of Gen Z say they would pay more for it. Developers, you better be listening.
Okay, so let's recap. We have capital flight, a nearshoring boom, game-changing tokenization, and a whole new set of buyer demands, all happening at the exact same time. Let's pull all these threads together and create a clear playbook for how to navigate this market in 2025.
All right, here's the playbook. If you're a high net worth investor, the smart move is a dual strategy. Use Miami to protect your capital while targeting those high-return niche opportunities in Latin America. For small and medium investors, the door is wide open now to fractional ownership through tokenization. And if you're a developer, the path forward is crystal clear. Build the industrial spaces for the nearshoring boom and build the smart, sustainable, walkable homes that the next generation is begging for.
All of this leaves us with one final big question to chew on. As property becomes a digital, tradable asset, and as priorities shift from finding a place to live to building a tool for financial freedom, what is owning a home even going to mean for the next generation? That's the question that's going to define the future of real estate for all of us.
Maybe you should just get